So Jared, interest rates are down right now, and I think a lot of people have the question going through their mind because they might be thinking about retiring soon, and with interest rates being down, with bond rates being down, how am I going to get enough income from my portfolio, from my money, and do it, with some degree of safety? So glad you're here with us today, Jared. What can you tell us about that?
Thanks, thanks, Brian. That's a difficult question. Yields and rates are very low. I know I just refinanced my house a couple months ago, and I'm sub 3%, 30-year mortgage, and the 10-year treasuries hovering around 1.5%. So you're right, rates are historically very, very low right now, and that's a problem for retired people or people that want income in general. When historically 5, 10, 20 years ago, you're able to rely much more heavily on high quality investment grade bonds. Today, if you rely on those high quality investment grade bonds, you're getting very, very low yields. So most of our clients have been leveraging high dividend paying stocks. Dividend paying stocks are paying much higher than investment grade bonds. They've also been looking at the high yield market. So the high yield market, the nice way to say it is speculative grade or non-investment grade or opportunistic income. Kind of the dirty word is junk bonds. But in general, these high yield bonds have lower credit quality. So there's more default risk, but there's much higher income. So it's a really good alternative for clients if you think the bond is not going to default. And when you look at the current economic environment, we have a very low probability of near-term economic recession, and therefore we have very low default expectations going forward. But that being said, if you're leveraging high quality dividend paying stocks, those are relatively easy to diversify, but non-investment grade bonds, junk bonds or high yield bonds are harder to diversify, and you really should rely on a portfolio of pooled assets there with a mutual fund or an ETF portfolio there. But most of our clients are getting high yield from high dividend paying stocks and high yield bonds today.
Great. Well, great information, Jared, and thank you again for being with me today.
All right. Thanks, Brian.